Today is the first of two parts of a webinar talking about the GASB's latest due process document on the financial reporting model reexamination project. The technical name of the document that is out for comment is a preliminary views document on entitled Financial Reporting Model Improvements. My name is Eric Berman. I am a partner with Eide Bailey. I also serve on the task force advising GASB in terms of which direction to go on this entire project. I've been on the project for about 3 or 4 years, and we have a number of twists and turns to go before the project is finalized. And this is just another step in the project, and we wanted to bring it to you. So today's agenda, we're gonna talk very briefly on the background of the project, and then the main thrust of today is talking about the GASB's preliminary views on what they're thinking about in terms of governmental funds, and then we'll finish up the hour talking a little bit about the presentation ideas on governmental fund financial statements, and then give you a few quick examples, and then finally finish up with your questions. One thing you'll notice as we go through today, and for those folks who are on tomorrow, you'll notice as well that this is fortunately or unfortunately, depending on your point of view, it's not a full-blown blow up everything in the financial reporting model and start over. GASB originally had an idea to do some of that, and they quickly backed away from it simply because, you know, they would probably never finish a project with that sort of scope. That sort of scope, you'd have too many ideas, too many you know, things to potentially fix. And so this is a targeted improvement. And the first real target is on governmental funds. There are two related projects to it. The first being on revenue and expense, and there was a due process document on that came out about a year ago, and so the GASB's in the middle of deliberating some of the concepts on revenue and expense, but they have a few miles to go on that one before a preliminary views document. The latest technical plan has the next due process document on that, on the revenue and expense reexamination project, potentially out in the fall. But we'll wait and see how that all sort of works itself out. The next piece is a reexamination of the framework of note disclosure. And I know whenever I go around the country and talk about GASB standards and give a GASB update, you know, inevitably somebody remarks, gee, GASB has never met a note it didn't like. And, you know, in many cases, that's true, that our note disclosure is for many governments is very, very lengthy and redundant in many aspects to elements of the management's discussion and analysis. And some stuff just isn't essential to some preparers. And so the GASB is trying to take a crack at developing a framework as to what should be in the notes and what shouldn't be in the notes, and how to decide what should be there and what should not be there. And then from that framework, they're going to discuss if indeed it is a good idea to re-examine existing note disclosure and perhaps note disclosure before a certain standard. And it may be a standard that's been out for a couple of years and re-examine everything all the way back, or they may just do a targeted re-examination, or they may just do a framework and then say, okay, everything on a go-forward basis will apply the framework as to what should be included and what should not be included. But at least on that related project, we're talking years down the road before they're done on that. So I'm sorry to disappoint you, but we won't be discussing those two today. So, as I mentioned, this project has been going on since about 2013, and it started off with a lengthy set of roundtables around the country. You may or may not have been asked to participate in a roundtable. I was participating in one out in California, and all sorts of governments were invited, and all sorts of all sizes of auditors and audit firms, users, governmental analysts, and so on. And GASB staff analyzed all the data that they gathered and started up the project about 2+ years ago with gathering a task force, of which again I'm on that task force. And our task force includes not only preparers but also auditors, users, all sorts of state and local governments are on it. So not just cities, not just states, not just authorities, but there's some utilities on there. There's representatives of tribal nations that are on there. The user community is on there, the bond analyst community. And so they hear a lot of information from a lot of different stakeholders that is there. So we're at the stage now where we're on strike number one. Well, we're past strike number one. Strike number one was the invitation to comment that was out a while ago, and now we're on the preliminary views document, which is the second go around. Coming up next year, the latest estimate being in June, will be an exposure draft, and what will be in the exposure draft is basically everything that's been decided after comment on the preliminary views, plus some other ancillary items that are going to be added later. And we'll talk about those a little bit tomorrow. And then the latest and greatest estimate is a final standard on the redo of the framework, probably by March of 22. And for those of you who are planning retirement, well, it doesn't mean implementing in March of 22 of any sort of changes that may be occurring. It's going to be a release of a standard. The implementation dates are anybody's guess. So here's what's going to be. Here's what GASB has a preliminary view on governmental fund statements and governmental fund operations. Now, granted, these are not final standards. These are just their preliminary views, and they're looking for information from you as to what's right, what's wrong, and so on. So what they have heard over the years since the implementation of GASB 34 is that, fund information for governmental funds is really inconsistent. Our recognition of assets and liabilities is different from government to government, and sometimes within governments. So, for example, if you have an accrual, say, for Medicaid, or some other liability, you may have to recognize that in a totally different time frame than you do for receivables and taxes receivable and accounts receivable and loans and so on. The other problem with governmental funds is it doesn't address a lot of newer transactions that have been put into GASB standards since the implementation of GASB 34, and for those of us who've been around for a while like I have, GASB 34 was passed in 1999. And we're now about to release GASB statement number 91. And so math being what it is, that's a lot of standards ago. And so things like derivatives and pensions and OPEB in the governmental funds are largely modified cash in, cash out, with a few accrual adjustments that are needed based on the conventions that are being used for governmental funds. And a third problem is the accountability aspect. One of the things that governments have as a hallmark of operations is accountability. And some folks say that, yes, the governmental funds react to what is in the budgetary documents. Yes, they closely align to what's in the budgetary documents, but you can't compare one set of governmental fund statements for a government to a peer government. So government A can't compare itself to government B, even though the two governments may be touching each other. And that's because they have different budgetary aspects. The governmental funds themselves, they focus on financial resources rather than economic aspects of transactions, and all that wiggle room, all that variability plays itself out in those reconciliation schedules that we do after the governmental fund financial statements up to the government-wide statements. In some governments, those are pretty lengthy and high dollar value reconciliations between the fund statements and the government-wide statements. And so many of us think that the governmental fund information is ineffective. And so that's why the GASB went down this road. So what is the board's preliminary views on governmental funds? Well, if you think about it, it's not much of a huge blow up change. Our current measurement focus and basis of accounting is based on what's called the modified accrual basis of accounting in the current financial resources measurement focus. It's based on largely modified cash with certain adjustments. The proposed method is the short-term financial resources measurement focus. Now, you may say, gee, Eric, you're probably smoking something. And what's the difference between short-term financial resources and current financial resources? Well, many of us align our receivables and payables to some measure in terms of days, meaning did we receive our taxation, did we pay our payables within, for example, 60 days of our reporting our reporting date. So if you're a June 30 or a December 31st date, well, 60 days on is August 31st, or 60 days on after December 31st is February 28th, or in some years February 29th, or if you count the days, maybe to March 1st. But most of us live within that 60-day accrual period for taxes and so on. Well, the short-term financial resources is similar, but the amount of days will and may change based on a number of factors. First, transactions would be recognized as they occur rather than after the fact. Now, I just described to you a certain situation. Did we collect our taxes within 60 days after the reporting date? And if the answer is yes, chances are we have a receivable for some governments. Or did we pay our payables 60 days after the reporting date? Well, yeah, then we probably have a payable. Well, the GASB has a preliminary view that transactions should be recognized as transactions occur, which is more on the full accrual basis of accounting, but not quite. The balance sheet and the statement of revenues, expenditures, and changes in fund balance will include the summation of those operations and transactions for the reporting period. But given the fact we're focused on financial resources, not much may change between what we are currently doing and what the GASB is proposing. And so the GASB is proposing, at least in the balance sheet, that most of our assets are going to be cash. And of course, that may include cash equivalents and investments. Assets that are available to be converted to cash, and you can, in your mind's eye, summarize what those may be, and those are probably going to be receivables. Assets that are consumable in lieu of cash, and that could be some form of prepaid, or if the GASB so goes down the road of issuing information that should be a deferred outflow of resources, that could be as well. And then the spending and revenues for the period are going to be predicated on the flows of transactions as they occur, or in the case of long-term debt, as they mature. And we'll get to some specifics in a little bit on that a little later on in the hour. But that's basically what we're talking about in terms of the short-term financial resources. So there could be, assuming that this comes to fruition, there could be, for the first time, a little bit better consistency between governments in terms of what is in our balance sheets and what is in our statements of revenues, expenditures, and changes in fund balance. So for the first time, analysts and our bondholders can actually compare from one government to another. But the beauty of having the short-term financial resources focus is, again, that focus on financial resources. And since it's a focus on financial resources, our balances that are left over at the end of a reporting period, be it a fiscal year or an interim period, could be very close to cash, rather than a bunch of adjustments that are in there based on conventions put in place for various transactions over the years that are in GASB standards. The inflows and outflows, the revenues and the expenditures could be very close to how governments budget, depending on how that government budgets. But, knowing what I know about many governments budget on either a modified accrual basis or a modified cash basis, in and out, based on some form of statute or ordinance or constitutional provision, and they're very close to cash, or at least within adjustment of cash. And so this is not very far afield from the way that many governments budget. And what's left over at the end of the year for fund balance, or at the end of a period for fund balance, could be very close to what is available to be spent in the next period. And so some governments, I know, they have to file a report certifying free cash for the next period, and they do that with some form of statewide revenue unit or something like that. And so conceivably, the fund balance that's left over in a governmental fund could be close to that measure. Of course, we'll wait and see what the final results are. So I've been using this phrase short term, and I didn't really define what that period is. And so short term the GASB board has a preliminary view that short term, it will encompass transactions that normally, and I bolded the word normally because there's a little bit of a tug of war on the word normally, transactions that normally will convert to cash or generate cash or require the use of cash. So, okay, converting to cash, that would be receivables. Generating cash, could also be receivables or sales of assets or providing of programs and that are going to be reimbursed, or grants and things like that. Require the use of cash, that would be your payables, your accounts payable. And so if you normally transact within the definition of a short term, then you declare your accounts payable. Now, what is that definition of short term? The GASB has a preliminary view that the definition of a short term transaction is one that fits those categories within 1 year from the inception of the transaction. Does that mean that you have to anticipate what payables will be 1 year from now? No. Does that mean that if you have matured debt that is unpaid as of the reporting date, that would normally be paid, would you have to declare a liability? Probably. And would you have to declare things that are normally beyond 1 year? Well, no. That would be a long-term transaction. It would not fit in the governmental funds. So that does not, what that means is, for those of you who are a little nervous about putting things like pension and OPEB in your governmental funds, well, unless those contributions to plans from the employer haven't been paid and they are due and they are normally due, well, you don't have to pay it in. You don't have to record it in your governmental funds. So the word normally, again, is a misnomer, and it may have some variation. So if you're a government that normally pays its bills in 2 years, well, the 1 year might not work because you normally pay your bill in 2 years. That said, most governments pay their bills within 1 year for sure. There may be some wiggle room in terms of bands and TANs and so on. And again, if you don't pay your bills on a normal basis, you may have some changes. So what could be in a governmental fund balance sheet? Well, pretty straightforward. If you take a look at the elements that are here for assets and liabilities, the only thing that may need adjustment based on your current balance sheet is your notes and other long-term receivables, because we're only going to record them as assets if they become due. And for liabilities, we're only going to record any unpaid balances of debt that became due during the period, but you just haven't paid them. And so not much change. And I hope you're breathing a little bit of a sigh of relief. What's not going to be there? Capital assets are not going to be in your governmental funds. Liabilities, yeah, as I mentioned before, no pensions, no OPEB, no asset retirements, no leases other than short-term leases, so that the new stuff coming on in the next couple of years for GASB 87 probably not going to be there. Comp abs could be a big change because it won't be a liability unless it is matured and come due. And we have some miles to go on this. Inflows and outflows, pretty straightforward stuff. Your inflows and outflows doesn't look like a lot of change except predicating the transaction on whether or not the goods or services have been provided in accordance with the short-term financial resources measurement focus and basis of accounting. So again, the level of estimation looks like it's going to be a little bit less should this go through. So what is not going to be in a statement of revenues, expenses, and changes in fund balances probably the most major change is going to be your other financing sources and other financing uses on tax anticipation notes and revenue anticipation notes, and one can gather probably bond anticipation notes as well. The purchase method for inventory and supplies, that's not going to be an outflow. Obviously, depreciation, prepayments, that looks like it's gonna fall off the board. So again, looking very close to what cash in and cash out is. So with that, Amy, I got to hand it over to you for our first polling question.
All right, our first polling question. Which of the following would not be presented in a governmental fund balance sheet, assuming the short-term financial resources measurement focus is approved as drafted by the GASB? So it could be cash and investments, notes and other long-term receivables that are not due, accounts payable, tax and revenue anticipation notes.
Okay, that's good. Most of you picked up that notes and other long-term receivables that are not due will not be in the short-term measurement focus governmental fund balance sheet, and it's simply because they're just not due. And of course, the converse of that, long-term payables and notes that are not due would also not be accrued as a payable. And so the measurement focus and basis of accounting is going to be very close to cash, and cash in, cash out, or similar to your budgetary flows. So with that, let's talk about what the balance sheet may look like. And this is a snapshot of what is in the preliminary views document. This is the balance sheet for a typical set of governmental fund financial statements. So the title at the top will be short-term financial resources balance sheet, not just balance sheet. And so we'll have to, assuming this goes through, we're going to have to retitle our fund statements. And then the next piece is below the title, there'll be an explanation box, just to give folks notice that that this balance sheet is different from not other fund statements in your proprietary funds, and it's also different from the governmental fund statements. And obviously, the language is going to be subject to change over the next couple of years, but the current language is this financial statement presents a short-term view of governmental fund activities and reports items of a long-term view differently, and so on. And that's giving folks notice that these are different. Notice on the left-hand side, the categories, short-term assets. It does not say assets anymore. It says short-term assets, and there's a total button, a total row on the bottom there. And then, hang on, let's click back here. Come on. And then the liability side. A little bit longer title there, short-term liabilities, deferred inflows and of short-term financial resources and short-term fund resources and fund balances. Notice again the subtitles, short-term liabilities, deferred inflows of short-term financial resources, and then short-term financial resources fund balance. So they're taking a baseball bat and making sure you know these are short-term financial resources. Now, some folks have asked over the past couple of weeks, gee, what happened to all the fund balance categories? Well, the data set that GASB staff used only had restricted, assigned, and unassigned. It doesn't mean that that non-spendable and committed might not be there, but I think we have a few miles to go before we sleep on whether or not those categories will be there. But again, at the top of each fund statement, you're going to have this box that's there. So because of that, think about what's in your reconciliation. And what's in your reconciliation today is going to be different than what it would be under the short-term financial resources measurement focus. Obviously, your capital assets and long-term liabilities, yeah, that'll always be there. Perhaps your internal service fund activity that is reported with governmental activities. Obviously, if you have internal service funds, that would be there. But the only thing that's really going to be added is any sort of the long-term receivables, maybe some compensated absences, pensions, and OPEB. But this reconciliation might be a little bit easier to prepare. So then let's take a look at the P&L, as I like to call it, because I'm old school. So the statement of revenues, expenditures, and changes in fund balances is now going to emphasize also that short-term resource flow, short-term phrase. Instead of all those words, it'll say statement of short-term resource flow. So the words revenues, expenditures, and changes in fund balance, that's proposed to be gone. The explanation statement is going to be there, again, subject to all the due process of GASB. And then the categories, it'll just say instead of revenues and expenditures, it'll be inflows of short-term financial resources for current activities, and then a total button, of course, and then outflows of resources for current financial activities, and then net flows, net short-term flows of financial resources is the bottom line. Now, you're probably in your mind's eye saying, what's going to happen to my other financing sources and uses? Well, they don't go away. They're just going to be retitled to non-current. And that'll just be your transfers in, capital outlay, transfers out, and debt service. And then you're going to come down to net flows of short-term financial resources for non-current activities, which, if you think about it, it's not a bad way to be. I mean, just taking a look back through what we just went through, it's pretty much the same as what you do today in most governmental funds. It's just retitling a lot of it and maybe some adjustments to accrued items that are there that that are estimated now, and now they'll be maybe closer to cash if we indeed go down this road of short-term financial resources. So with that, the reconciliation then between your statement of revenues, expenditures, and changes in fund balance and what's in your statement of activities, well, that might change as well. Should we go down this to this short-term financial resources flows? The reconciliation, obviously, capital outlay probably will always be there. Any sort of bond proceeds or repayments on to reduce liabilities, that will always be there. Pensions and OPEB and comp abs, since we're not going to present comp abs in governmental funds, well, they're going, unless they're matured, of course, well, we're going to present those as part of our reconciliation. And then any sort of long-term receivable revenue that had timing differences. I know that some of us have certain regulations with regard to how we recognize our tax revenue and which fiscal year we can recognize our tax revenue, even though it may have been levied. Well, that might end up being part of this reconciliation coming up in the future. And again, whenever I say maybe, probably, things like that, the only reason why I'm a little bit hesitant on it is because this is only the second due process document. So with that, Amy, let's go to our second question.
All right, our second polling question here, true or false? Statement of revenues, expenditures, and changes in fund balances will now be statement of short-term resource flows. All right, give me a second here.
All right, so at least the most of you got the proposed title. Again, it's just proposed, and this could change, of course. The statement of short-term resource flows. I think that, in my own opinion, statement of short-term financial resource flows, and I may have even said that financial resource flows, that could work as well, but nothing is in a final standard as of yet, and so we do have some twists and turns to go. So you're probably saying, okay, gee, this doesn't seem like all that much. What does this mean in terms of the transactions? So all right, let's go through some examples. So here we have a permanent fund, and I tried to be as close as possible to what we use today in the modified accrual basis of accounting, current financial resources, and what would a typical transaction be, and then what would be proposed. And this particular transaction actually is in the preliminary views document. Actually, most of these are in the preliminary views document, but I made them look a little bit easier to follow here on the screen. Here we have a permanent fund, which some of us use as budgeted trust funds or budgeted endowments. Here we have an amount of investments. We have a fair value appreciation. In both models, probably not going to change 1 red cent. You're going to have a debit to investments, and you're going to have a credit to inflows, which would land up obviously in your fund balance. So property taxes. I know a lot of us are a little concerned with, gee, how are we going to recognize our property taxes? Well, in this case, we have property taxes due 6 months after period end. And obviously that time frame is important. If they were due 12 months plus 1 day, well, that's beyond 1 fiscal year. And so the entry may be different. But as of right now, we're going to declare a taxes receivable and a deferred inflows of resources. Well, what are we going to do for the short-term financial resources model? Exactly the same. Now, again, remember, if you happen to be in a jurisdiction which has a law, regulation, constitution, and so on, which requires a different treatment, we're going to have to wait and see how that all works out and how that all aligns to the short-term financial resources focus, if indeed it does come to fruition. So here's another one. This assumes that the current financial resources model is a shorter term accrual. Here we have an end of the year receivable balance of about $13 million. We have $3 million that is due 3 months after year end, and then 10 million is due 6 months after year end. Well, here's where we're going to start to see some differences. The resource flow statement, look at the difference on the right-hand side of the screen here. Obviously, your P&L is going to look totally different than in the proposed model, the short-term financial resources model, versus what it looks like here. There's no deferred inflow of resources. All you're going to have is a taxes receivable, and then inflows of resources, meaning revenue, for that 13,342,623. Now, most of you may budget like that already, so this may be closer to your budget. Prepaid items. A lot of us have prepaid insurance, and on our governmental fund balance sheets here, we had a beginning balance amount of about $6,000. We have spending on prepaid items of $60,000, and then we have an end of the year balance of $13,800. And for those of you who are calculating out our outflows of resources on that, has to be 52,000 because that's how it balances. And guess what? our balance sheet is not going to change all that much, except for our non-spendable fund balance. Now, GASB did not put in the preliminary views how they would have fund balance on this. They didn't name non-spendable fund balance, and I know that I know at least one person who's already going to comment on it, saying, "Wait a second, how does that work out to fund balance?" If it does show up in the resource flows of 52,000 plus the beginning of the year balance, how does that all work out in terms of non-spendable fund balance? And so that might be something they may need to adjust between now and then. How about if you're putting in a new sidewalk in a subdivision? And we have a special assessment. We know special assessments have been going on for a long time, and they're common. Here in the current financial resources measurement focus, since we have a receivable balance, well, yeah, you got a debit to taxes receivable usually, or at least special assessments receivable, and then we have an inflow which aligns to the collections. Well, the short-term financial resources measurement focus, at least according to GASB, in the preliminary views, would not recognize receivables. So again, a little bit closer to cash. Could this change in the final model? Perhaps, again. Notes receivable related to, let's just say, lending. Let's say there was some short-term lending that was done either in between funds or certainly, for third-party lending. Here in the current financial resources measurement focus, looks like GASB would declare a note receivable and a non-spendable fund balance for the end of the year balance. And in the resource flows, since it's a repayment of a receivable, no amounts recognized, probably because you declared revenue prior to the current year. In the short-term financial resources measurement focus, unless it was due and not received, well, nothing would be declared in terms of that 3,742,000. The 645,000 would be declared simply because it's the flow of resources that came in. Comp abs. Well, it depends on how compensated absences and the details of what transpired. In this particular case, we have 25,000 due to employees who have, let's say, early retired, and let's say it's the end of the fiscal year, they early retired, and they're going to get their payout early in the next fiscal year. Well, here you got a liability and an outflow of resources. The only reason why you have an amount in the balance sheet is simply because there's a separation of service. If there wasn't a separation of service, well, nothing would be there. Accrued interest on long-term debt. Well, this could be a major change in terms of an accrued interest payable. So this could change in the short-term financial resources measurement focus. We're going to have an accrual of the end of the year balance and also some outflows of resources because they were accrued during the year. Tax anticipation notes. Not much of a change, so I'm just going to skip right on through there. Obviously, given the note disclosure project is still kind of in its infancy, assuming current GAAP would carry forward, you would still have to do your disclosure of short-term debt, and obviously you have to prepare the note disclosure schedule that has beginning, plus, minus, and end, and so it'll show up in there. Leases, and this assumes the lease structure in GASB 87. Here, obviously, we haven't implemented GASB 87 as of yet, but the current financial resources measurement focus isn't going to change all that much under GASB 87. The short-term financial resources measurement focus would just have an outflow of that 1,273,469, And I say it's debt service. Of course, you could say lease expense or something similar to that. And that I think the GASB right now, in terms of the individual line item titles, hasn't really focused on that as of yet. So with that, let's go to our third polling question, Amy.
Third polling question. From what you have heard on the proposed changes to the governmental fund recognition and reporting, do you believe that the changes improve governmental fund reporting and operations, hinder governmental fund reporting and operations, or about the same?
So pretty evenly dispersed. And so far, when I've talked about this around the country, it is fairly evenly dispersed. It really depends on where you're coming from. And and certainly I hear fewer folks saying that, yeah, this will hinder my governmental fund reporting and operations than improve versus or about the same. I really believe that, you know, headed down the road, absent totally jettisoning the governmental funds and not even reporting the governmental funds in our general purpose external financial reports, uh, you know, this is a reasonable compromise in my own personal opinion. Are there issues with it? Sure. And I think that there are going to be significant comments on it as we go forward throughout due process. Uh, is it going to improve governmental fund reporting and operations? I think so, because I also think about folks, that may be coming and working in our governments in the next generation. Is it going to be easier for them to understand the transition between perhaps coming out of college, university, and working in a government and trying to understand what the fund statements are for versus what's in the government wide? Well, if the fund statements are closer to cash in, cash out, or closer to a budget, well, then maybe it might improve governmental fund reporting and operations, or at least they're going to be about the same. Where I think there's going to be a little bit of a challenge is obviously explaining the changes in the titles and perhaps explaining the text box on top of the fund statements. When I first saw that, in my own personal opinion, and certainly not the firm's opinion, my own personal opinion, I said, well, wait a second, that's sort of like the Wizard of Oz when the wizard is revealed behind the curtain and saying, gee, don't look at the guy behind the curtain. Well, don't look at these fund statements. But then when you think about it, it's not a bad idea to at least explain the differences between what is in a governmental fund and what is in our government-wide financial statements. Of course, that assumes that whoever is reading the governmental funds is also reading the government-wide financial statements, and in many cases, our users only focus on one thing, and maybe only focus on our cash balance, or maybe even only focus on whether or not they have a clean audit opinion. And so clearly, I think we have some miles to go before we sleep, as we like to say. So I'm going to click back in here. So here's what we're going to discuss in the next segment of our program, which will occur tomorrow from 2 to 3 o'clock Central Daylight Time, and obviously do the adjustment for whichever time zone you're in. So very important segment on what the proprietary funds statements may look like, and what is the preliminary views, including operating and non-operating revenues and expenses. Current GAAP for operating and non-operating definitions is at the preparer level. There's no real consistent gap as to what is operating income and what is non-operating income. In many respects, it's defined by the operations of an individual government. So if a government is a state lottery, well, they look at other state lotteries and say, okay, well, how did you define it? And that's what's in our operating versus non-operating. And the same in colleges and universities. How did you define it? And so on. Well, again, we're talking about trying to get to a little bit more consistent gap. The other piece is tomorrow. Budgetary comparison. This one is pretty easy to take. I think you'll probably say, that's much ado about nothing. And then there's a few other issues that people seem to have glossed over. And in reading at least the initial preliminary views, and there's an issue on discretely presented component units, and there's an issue on presenting certain additional schedules, which you may or may not enjoy. And then, unlike any other preliminary views document in recent memory, this preliminary views document has alternative views. And what are alternative views? Well, it does not mean that what alternative views are when the GASB board has not come to consensus. And there is a lack of consensus on this, and we'll talk about that when we get there tomorrow. We'll also talk about how you can comment to the GASB. What are your opportunities? And there are many opportunities of commenting, and I would encourage you to comment to the GASB, or if you want to present your views to me or to us, by all means, please do so. So with that, if we have any questions, do we have any questions, Amy?
We have just a few. So a lot of you are asking about the recordings of this training. It does take us about 7 to 10 days to edit the webinar and get it out to everybody. So if you are on the registration list, if you're attending, you're on that list, we will send you the recording link and then you can watch it on your own. Just remember that recording is not available for CPE credit. And for those looking for CPE credit, we will also issue the CPE certificate within 10 to 14 days after the session, and you'll receive that in your email. We do have one question related to your presentation. So did I understand you to say that the short-term balance sheet would be in addition to the government-wide statements or replacing them?
That's an awesome question, and I apologize if I wasn't clear. It will replace the current balance sheet, but the government-wide statements would still be there. Assuming you publish government-wide statements, there are a number of governments out there that all they do is publish governmental fund financial statements, and if all they do, they have a modified audit opinion. Doesn't mean that it's wrong or right. They may have a special purpose framework. And by the way, if they do have a special purpose framework, some of this might not apply. But your current balance sheet for governmental funds would be retitled and reconstituted based on whatever the final standard is. Your government, in most cases, for general purpose governments, your government-wide financial statements would still be there.
Perfect.
All right. Well, we pretty much stuck the landing here. And so with that, thank you for your joining me this afternoon. And I'm looking forward to hearing from you tomorrow.
Awesome. Thank you, everybody. Have a great day.